Okay, so yeah, cost of living, the rising cost of living. I mean, what I wanted to do was talk about not many people in my walk of life, if you like, have seen or had need to speak to a financial advisor before. You often find, like I say, that it's people that either are very wealthy or have come into money through other means, such as, like I say, a medical negligence claim or a personal injury or winning the lottery. An awful lot of us in day to day life haven't had the need to speak to a financial advisor. So, what I like to do is just sort of give an insight into that process because no matter who we speak to, the fundamentals of financial planning really are the same. So, it's about having what we call an objective or a goal that you want to meet, whether that's increasing your income or saving up for something in the future. The first thing to do is establish an objective and then all the other pieces that fit together to create a good financial plan apply to everyone really. So that's what I wanted to run through today and also talk about the ever increasing cost of living. So I've been presenting on this subject. I'm just going to move on a slide. I've been presenting on this subject for, well, since 2021. As you can imagine, after COVID hit everyone, and then the recovery for COVID, and then all of these things here that I have listed on this slide created the perfect storm. I say perfect, it wasn't. It's been horrendous for lots of people, but it has created this situation that people refer to as the cost of living crisis. Of course, many of my clients have suffered. And really, what I wanted to do is on this slide just give you a little bit of background into how we've ended up in this position. You'll have seen it on the news, it's been coming for some time. Just there, we've got Brexit quite some time ago. I think it was the first thing on the list that started affecting things like supply chains. So, products and services coming through from other countries, costing people an awful lot more to get through the red tape, if you like, from other countries into the UK. So, that was the first sort of inkling of the fact that things were going to start costing us in Britain more money, sadly. After that, of course, we've all been through the horrendous time that was the COVID years. Very surreal, I'm sure. Just like me, when you look back on it, you can't quite believe what we all went through. But again, the impact on supply and demand. So, you remember sort of queuing up for toilet rolls and not being able to get the basics that we needed. Kind of gave, in my opinion, an opportunity for prices to be pushed up because the demand was there and the supply just wasn't coming through. So COVID, also the recovery from COVID, many businesses closed. So there was less competition around, which gave the opportunity for costs to go up. After that, and this is why, this is quite a long list and quite a horrendous situation that we found ourselves in. The war broke out between Russia and Ukraine, still bumbling on. We don't hear an awful lot about it on the news, but you'll have all seen what happened there. And the thing with that situation was, again, affecting the supply and demand for things such as oil. Our energy prices hiked up. We were all suffering ridiculous rises in the cost of gas, fuel. I mean, looking back, it was a crazy time. And all these things infected inflation. So all these things created this melting pot of issues that meant that costs were going up. And in reaction to that, what the government did, because what they need to do is try and keep inflation down at 2%. Now, inflation is the cost, the real cost of things over time. So it's the rate of which costs of, say, a basket of goods from your supermarket are going up. So inflation was going up. I think there was a point when I was presenting on this a couple of years ago or 18 months ago where inflation was about 10%. You might remember it was like nothing we'd ever seen before. It was unprecedented. So the government were doing everything they could to bring that inflation rate down, because their goal is to keep inflation at 2%. Now, the good news is inflation, when I checked these figures before this presentation today, inflation is back down at 2% now. So everything that they've done has worked. So what happened, the way that they combated that was to increase interest rates. So again, a few of you might have seen on the news, interest rates kept going up and up and up, Bank of England interest rates. And what that has a knock-on effect to are people who've got mortgages. So mortgage rates that were on variable rates were soaring. Great news for savers, great news in cash accounts and people that are saving money, for people that are saving money, but obviously not great news for anyone that's paying interest on a loan or a mortgage. So interest rates soared in order to try and bring inflation down. What we're seeing now, and what I'm happy to report, is that inflation has come down. We are at 2%, but that doesn't mean that everything's dropped in price. All that means is that things aren't increasing in price as quickly. So that's just a bit of background to how we've ended up. I mean, I'm sure everybody living it day to day, it doesn't affect how you're trying to manage it, but that's how we've ended up where we are. And touch wood, for a while now, like I say, since I first presented on this matter, things have settled off, even with the general election, obviously, that we've just been through. I've seen some changes just recently that they're announcing. Things are going to come out over time as to what Keir Starmer's going to do going forward. But yes, we're in a better position than when I was presenting this a year ago. So that's good news. Okay, bit of background for you. Oh, that's a storm picture for you. Okay, so going back to the fundamentals of financial planning and how that can be applied across for all of us. What I wanted to do is explain to you where we start when we talk to any client. If you were going to see a financial advisor, number one, we'd establish your objectives. So what do you want to achieve? What are you looking to do? Are you looking to increase your income, save, plan for your retirement, look at your inheritance tax planning situation? All those considerations start with a budget. So what we talk to our clients about, first of all, is how much are you bringing in? So what is your income and how much is going out? And we'll split that down. We'll split it into your fixed expenditure, and then we'll look at your discretionary expenditure. Because I'm sure, as you know, and we've all had to do this over the last couple of years, there are areas where you can tighten your belt and sort of make that gap a little bit smaller, hopefully. So what I wanted to say is budget planning. With me, I've got a few bits to open here. So budget planning is all about knowing your own financial situation. Don't shy away from it. It's really easy to stick your head in the sand. I know it is, and it's incredibly boring to sit down and write a list of what you're spending, or what your family's spending, or your expenditure, and sort of face facts. But once it's on paper, it's in front of you, and it's easier to sort of make those decisions. So we're looking at income and expenditure. Write it down, include your family members, include the money that's spent on dependents, and don't be afraid of that detail. I think some of the banking apps lately, sort of, if anybody uses them, they have an insight tool where you can break down sort of what you've spent on what every month. Sometimes that's frightening to look at. I'm fully appreciative that at the moment, like I say, with the cost of living crisis, there's not that much disposable income for people out there. So it really is a case of tightening your belts where you can, if increasing income is your objective. Sounds really basic, and that's what I want to get across to people. Financial planning can go very technical and go into tax planning, of course, where people need it. And that's where financial advisors come in. But the basics of it starts with knowing what's coming in and what's going out every month. So bear with me because I've got a window in the way of my slide. One sec. So you want to really be asking yourself, does this fit? Is this going to meet my objective? And how does my income and expenditure affect my plan going forward? Be honest with yourself, and analyze it rationally. Okay, so that's budgeting. There are a lot of online budget planners through Money Supermarket, Money Helper. I've put a link there. Quite happy to share after my presentation for people to start looking at a basic budget. It's where every financial planner would start with your objective and what your budget is. So a service that we provide at Irwin Mitchell for the people that I help initially, before we enter into the process of financial planning, we'll do what's called a financial health check. And these are all the aspects here that we look at when we're carrying out a financial health check for someone. So you'll probably find this useful if you were going to do something yourselves to sort of review where you're at. So we'll look at savings that you have, pensions and investments. We'll review any existing arrangements to assess their suitability, and we'll signpost where you might want to achieve the best rates for savings. So looking at your current situation. We'll look at, like I say, budgeting and any debt reviews. So we'll review your income and expenditure as I've just run through, and we'll review your existing mortgage, credit cards and loans. So it's looking about where you are, where your current situation is, and is that providing the best plan for you going forward. We'll look at any protection policies, whether you've got any of those in place. That's your life cover, your health insurance. We'll provide advice on existing policies and make recommendations where appropriate. So yeah, one of the first steps is when we meet a client, we'll look at everything that they have and we'll review whether or not it's suitable for them. It's something you can consider yourself, like I say, looking back at budgeting and what you're paying out every month. Is that worthwhile? Is it serving a purpose? And is it helping you work towards your objective going forward? Another tool that we use is cash flow planning. That's a technical tool that you'd need to speak to a financial advisor about, really. We have access to systems where we can input somebody's income, expenditure and policies and how that might change going forward, because obviously access to certain benefits change, care needs might alter, and we can plan as best we can for the future through cash flow planning. Of course, that's only ever a snapshot in time, because that might, well, it alters. You know, we can only ever look at the information that we've got now and see how that's going to pan out up and for the rest of your life. But that is something that we do through cash flow planning. We'll also always carry out a review of inheritance tax situation that anyone's in. There are certain allowances that you have, up to £325,000. If your estate's less than that, then you're not going to fall into the bracket of inheritance tax. But in this day and age, with the value of properties increasing as they are, it's worth knowing what the limits are and making sure that any dependents aren't paying any unnecessary inheritance tax. So it's certainly worth having a look at the rules on that. And then what we do, we pull all that together and we provide a tailored financial plan outlining your long-term goals and objectives and how these might be achieved. So again, that's just an oversight of what a financial planner would do. So if there's anything at all that anyone day to day can pull from that, has any questions on, I'll answer them later. But if there's anything, one thing you can take from this, it might just help you going forward. Okay. So when we're looking at providing financial advice to someone, again, no matter how much money you have saved, or if you're planning on saving in the future, you'd hope to save, it's always worthwhile remembering these three pots. So what we'll always do is make sure that someone has an emergency fund a contingency fund, something easily accessible for if the washing machine breaks, there becomes a hole in the roof that you've got to have sorted. These are emergency occasions where you're going to have to draw from a bank account immediately and you need access to that cash. A basis for that is to look at your income and look to plan for having savings of at least 3 to 6 months worth in cash. So 3 to 6 months of your income saved in cash. Easier said than done, absolutely. I'm talking from a situation where we find it difficult to contend with the cost of living month to month, never mind having 3 to 6 months worth of savings in the bank account. But what I'm talking to you about is an ideal situation. So that's what we would always recommend. Then medium term, what we'd be looking at is anything that you plan within the next 3 to 5 years. So saving for something in particular, saving for a holiday, saving for a new car or a family member's special event, birthday, anything that you can plan in advance for. So we'll have a short-term pot, emergency fund. We'll have a medium-term pot for anything that you can plan for between 3 and 5 years. And then everything else we'll be looking at long-term, and that's where our investment portfolios come in. Investment portfolios, and what I'm talking about there is a generalized term for anything that you can put away for more than 5 years that you're hoping to get a reasonable investment return on that's better than those that are available in bank or building society accounts. Now, like I say, over the past couple of years, because interest rates have soared like they have, bank or building society accounts, if you can tie them up for even 12 months, have been really good. I think my next slide gives some examples of that. But what I was going to say is going forward, of course, what we'll always say is a risk-based investment. So something that's invested in equities or what we call fixed interest investments, which are government bonds and government bonds and corporate bonds. When you're taking a little bit of risk with a pot of money over the long term, the view is that the returns will always outweigh that available in a bank or building society account, which is where we come in to be talking to people about making investments for the long term. Okay. Yes. So I put some rates on here just recently. They may have altered since I did this presentation a couple of weeks ago. Forgive me, I've not updated the figures there. But when it comes to cash savings for anyone, so if you want to sort of make your short-term goals, put some money aside because you've done your budgeting, and even a small amount, if you're looking to put it away. Of course, the other thing that we always cover are pension contributions. I didn't mention that earlier. But if you have the funds to make pension contributions, then of course there are tax advantages to doing so. Separate to that, we have savings accounts. The savings accounts that we often use for clients are the National Savings and Investment Account, because they're fully backed by the government. They have decent rates of interest, and there are different ways of saving. Some of you may have come across premium bonds before, where you can put some money away, and you'll be entered into a prize draw, and you might win a prize. But the rates are variable at the minute, but currently they're paying about 4.4%. Income bonds we use often for anybody that has a trust. We deal with lots of clients, of course, that have got personal injury trusts that make sure that their payouts that have come from personal injury, medical negligence, don't affect their benefits. So I know Melissa did a presentation recently about benefits. It's important to make sure that any funds that have been paid out to someone, to help them live the life that before the medical negligence or the personal injury occurred, it's important to make sure that they're ring-fenced so they don't affect the benefits that people are entitled to. So we often use income bonds as a way of holding cash, because you can actually use trusts within those income bonds. And a direct saver, paying about 4% at the minute. Like I said, these are good rates. They were high. I think they were about 6% about 18 months ago. I do see them because inflation's come down. Interest rates have not changed much. Everything's kind of on a level at the minute. So when we talk about where we might see ourselves over the coming months, fingers crossed, because we never know what's around the corner, as we saw from that list that I presented right at the beginning. But fingers crossed, things seem to be on a level at the minute, but we're yet to see what the new government will bring. As far as investments are concerned, we have the American election going on at the minute. That can have quite a big impact on risk-based investments because America, the rest of the world kind of follows suit when it comes to anything that fluctuates over there. So that's worth bearing in mind from an investment perspective. Okay. Okay. So what I would say is, and what I do have is a list of links that I'm quite happy to share with the rest of the group after this for anyone who's interested. But basically, what it does is offer access to websites that help you shop around. So, the best advice that I can give anyone after they've established what the budget is, what the goal is, and what they're trying to achieve is really to make sure that you take time out to shop for the best deal. So if you have a mortgage, do make sure that you're reviewing regularly what that interest rate is. Of course, I'm fully aware that you can't chop and change your mortgage deal all the time because there are charges involved. But it's worth taking advice or at least looking and comparing those best deals for mortgages going forward. It's the same with your energy provider, with your Sky package, whatever you pay for out there, it really is worth taking the time to sort of shop around. And what I do have, like I say, is a list of sort of it's really your money supermarket. Anybody that uses these price comparison websites online, it's just about taking time out to make sure that you can pull your belt in where you need to if that cost of living at the minute is really sort of taking hold. But I think the overriding message from what I'm delivering is, don't be afraid of that detail. And if you are struggling, the worst thing you can do is stick your head in the sand. You need to speak to somebody about budgeting and making those savings where you can.